Hey, hey, good evening, folks, wherever you are listening from, Lagos, the US, the UK, Canada. Welcome to another Spaces with me, Kalu Aja. I call it the Money Spaces. And here we're talking personal finance, the economy, and of course, how that all relates to your personal wallet. We want to make it personal to you when we talk about economic topics. Just how does it affect you and how can you take advantage of it? So, a real great treat this week. We've got the guys from AM Realty. They've been here before, and essentially what they do is they have this unique take on real estate yield, right? How they have a real interesting take on real estate investing in Lagos. That's where they're basically running their operation. So I've talked with them. I said, hey, we've done the first chat. They pitched something. Let's bring them back, see how that has gone, see how we can also learn, quote unquote, copy from them if we're outside Lagos and want to do this, or how we can also partner with them. And essentially, it gives us an idea into how else we can invest in Nigeria. If you know the market right now, the dollar is basically gaining value, naira is getting weak, and fixed income rates are also dipping downwards. So any investment that gives us an outlet where we can earn more yields, we want to talk about it. So great pleasure to have AM Realty. Come on, guys, on mute, say hi, and then let's get kicking.
Hi, Kazu.
How are you? How you doing, sir? You're very shy. You did the mute real quick. Why don't you introduce yourself? Tell us about your company. Tell us what you guys do. Then I have a few questions. Then of course, the audience will want to ask you some questions as well. So you've got the floor, sir.
All right. Thank you very much, Kalu. Um, Good day, everyone. My name is Adibolo Maiwa, and I'm the MD of AM Realty Limited, a real estate development firm in Lagos. We specialize in developing properties and ensuring that our investors optimize every penny spent. And one problem that we realized before we started the firm about 3 years ago was we realized that real estate investment in Nigeria was more of a developer's market. Developer, builds property and sells to investors or clients. They really don't pay attention, or most developers don't pay attention to how much returns that the the buyer gets over time, right? And that was the loophole we discovered, and we decided to start a real estate development company, and at the same time pay so much attention to the returns. So we transitioned into asset management. So after development, we help the clients to maintain, manage, and market the apartments to ensure that they get optimized returns monthly, quarterly, or yearly. So that's the summary.
Gotcha. So you basically take over the property and you're able to squeeze out more rentals from that property in Lagos. Because the background is this, right? If I was to invest, say, 100 million and to build a property in Lagos, and I basically went ahead and I gave that property out as rental, unless that guy pays me 10 million naira a year, really I'm doing less than 10% yield return on that property. But if I did the same investment, particularly the same 100 million naira and I bought, say, a government bond, is that naira or even dollar, I'm making more money. But real estate seems to be this thing that is supposed to give us, returns and also beat inflation. So this is why this topic is very, very interesting. That how else can we, if we're investing in real estate, how else can we squeeze revenues? So tell me, let's go into nuts and bolts. How do you guys do it? Give me the nuts and bolts. What do? You get the building. Who owns the building? Is owned by. If I have a building, I own it. I give it to you guys. What happens?
All right, then about when we start. Hello, can you hear me?
Yes, I can.
Yeah, so when we started like 3 years ago, we were building for rent, like every developer or every landlord would want to do, right? So just build the property, put it out for rent and get like annual rental. But over time, we realized
think I lost him.
The booming short-let market. That was after the COVID. Hello, can you hear me?
Yes.
Sorry, a call came in. I had to. Yeah. So we then realized the COVID-19, gave birth to a new market. I mean, that was the short-let market. We realized that people could make even 4x what they would make on annual rental by doing short-lets. But the problem is short-let has like high operating expenses. So if you're not like managing multiple short-lets, you're really not optimizing whatever you're spending to manage or maintain the property. So we decided to like tweak the model a bit. We're building like 25, 26 units of studios and one-bedroom apartments. So we decided to tweak it a bit and turn the entire facility to a short-let, right?
Yeah.
And we ensure that the pricing is very competitive. So a lot of our clients would usually go and patronize, hotel, like three-star hotel in Lagos for like 30,000. And we were offering a room and parlor, fully serviced, Netflix, Wi-Fi, you have a kitchen, you have an errand door, you have basically everything for 25,000. And it was good business for us because we were managing about 20 flats. So we're buying 100K diesel, it's serving the entire flat. So we're optimizing expenses, running the place efficiently, and of course delivering returns to investors. So the business model was simple. We pitched the idea to an investor. They buy up multiple units. So we have 20 flats, 20 investors who own different flats. We then manage the entire building as an entity, as a business entity, ensure that the operating expenses is divided evenly across all the units. They manage it, deduct all operating expenses, deduct our management fee, and send in their returns monthly. So for the past 3 months, I think the last time we were on this space, we were about launching. So this is like the 3rd month, and we have paid dividends consistently every month since we started launch. So and the rental yields has been fantastic. I mean, averagely, an investor is making between 250K to 350K monthly without doing anything, without lifting a finger. We are doing the entire marketing. Last month we had 95% occupancy rates. And when I looked at the data last night, I realized that a lot of our clients typically would patronize an hotel room. I was talking to a client 3 days ago, a guest, and he said before he started patronizing us, he usually would go to an hotel around the Keja when he flies into Lagos for 35,000, and he's seeing better value for money. A room and a parlor, has everything, and you're paying 25,000. You're paying for 10 nights, you're getting 10% discount. So it's good value for money and a better substitute to conventional three-star hotel. And because of that, we had to like scale up more projects, because where an hotel would work is where this would work. We're not targeting the luxury vacation in Lekki or Victoria Island. We're solving a real demand, a real need. People flying to Lagos need an hotel. People flying to Nigeria need an hotel. And they see our properties as better alternative to paying 35,000 for a single room hotel. So the model has been brilliant. Investors have been smiling. It has been running smoothly since we started.
So if I could summarize this, it's just more like you take an existing building that's a 4-bedroom flat, and you're able to convert that 4-bedroom flat to say 4 income earning spaces. More or less, you are in.
No. We take down. So what we do is we go and meet landowners that have properties that are underdeveloped and underutilized. Because we don't have money to buy the land outrightly, right? So we go meet them and say, you know what, this land is generating you 500,000. You have 20 flats, giving you 5K per month. When you sum everything up in a year, you're earning like 500K. I knock this building off. I will develop it, but I own that building for the next 25 years.
Wow.
So I knock that building off, you're earning 500K. I'll triple your return. I'll give you 1.5 million a year. But I want to build my own type of structure and manage everything, because we have to, return back dividends to investors. So we knock down the building, we build from the scratch, because, it has to come with our service. It comes with 24 hours electricity. We have like inverter systems. We have like an 100 kV generator. So we're like fully servicing the entire structure. So we take down the building, lease the land for say 25 years, triple what the previous owner has been earning on that land every year, during the period of the lease, and then some lease to the investors that, contribute funds to build up the property. Then when we start operations, we then share dividends to all of them every month.
So if I own the land, I get dividends plus the rental. So what does the landowner get? You pay me the lease. You pay me a lease.
So we pay them lease, right? So it depends. So there's a way we do the financing and the structuring, the deal structuring. So we look at what you are bringing to the table. So what's the value of that lease? So if the property is worth, say, 100 million, right? For 25 years, the property is worth 25 years. So that's the value of that lease. So we then structure a payment plan, across that 25 years, with the owners of the land, while we pay them yearly, then we operate fully on that land for that period of time.
Gotcha. So then the investors are they the ones that earn the return. So if you have got the land, that's between you and the owner of the land. I come in as an investor and then earn the rental returns from investing in that particular project.
Yes.
Excellent. What else is there for? So how much in terms of returns? I didn't want to ask about APYs, but
Okay.
if I was to invest, can you give me figures? If I did that, break it down for me, just so I can.
Maybe I should just come in there, Maiwa.
Okay, yeah, perfect.
All right. Thank you very much. So my name is Dayo. I'm also I run this together with Maiwa. Basically, let me probably just break down what the average person should look out for when you are making sort of like a real estate investment or generally an investment in Nigeria. But I'll just boil it down to real estate. So this is it. As Carlos said earlier, you have a riskless government bond where the government can just print money and pay you 17%, 15, 17% yield, risk-free, right? For 5-10 years, depending on the tenor of the bond, right? So you as an investor, you see something like that, right? So now, if you want to take extra risk to invest in something else that's not that bond, right? You request a premium. Now you look at the inflation rates in the country currently. If you average the inflation rate for probably like over the past 5 years, moving average probably around like 19%. Current one is like 22%, right? But you still want to use like moving average, what has been obtainable for like let's say the past 3-5 years. That's like 19%. Then so that's like an extra 4% premium already, or let's say like 2-3% premium already on the government bond. That you request. Then also, because it's real estate, you need another extra liquidity premium on it, right? Because real estate is not, you depending on how you enter, whether you are buying that property, if you are buying the property outright, for example, you have like upside in the capital gains of the property. So if it gains value over time, you can sell it and at a higher price, right? But for a lease, as my wife is talking about, so I'll go into that now. But let me just so it means that when you are looking at these percentages, at the end, you are probably looking for something in the range, a rental yield of, 21, 22, 23%, around that range per year for that investment to actually make sense to you, that cash flow yield per year. So that's net operating income, not even the revenue that is going to generate. Net operating income that will actually go into your pocket because, you have like operating costs, you have all of those costs, you have taxes that you are going to pay the government, you have all of that. So after you do that, you are looking for that 23%. So that's what you should be looking for, right? As an investor, you are going out. Anybody who wants to take your money should be able to show you like, a mathematical way of you to generate, or for you to, generate that amount per year before they can be able to take your money. So what we do here now is that because you are leasing, you have no access to capital gain. So it means that every cash flow that property will produce during that period matters. Every naira from that place, you need to find a way to optimize it. So now, because with the way our data is working now at the occupancy rate, I can tell you that annualized with what we've been able to deliver to our investors, we are doing around 25-26% for a rental yield. Now, because it is a lease for 15-20 years, the rate of return, that's the IRR, the rate of return on that is upwards of 30% because it's for a long